Hey everybody, what's going on? It is James here with your Bitcoin / cryptocurrency update for Friday, May the 1st. Before I jump into the content for this video, please do me a huge favor. Hit the thumbs up button, make sure you subscribe to the channel, and make sure you check the description for a link where you can join my Patreon for just $4.95 a month. Now, $4.95 option is going to be going away. The whole goal of the Patreon was to get to at least $1,000 a month to justify me doing at least 3 videos a week. And with the $4.95 level, it's just not going to get there. It doesn't look like, at least in a timely fashion. So I'm going to be doing away with that level. So if you're interested in joining and you've been on the fence, now's the time to do it. I'll probably be taking that down in the next week or two and then just leaving the $7 and above level. So let's talk about Bitcoin. The first chart that I want to take a look at today before we even talk about Bitcoin is going to be the Dow Futures chart. This is actually the Dow Futures. And guys, you know, I know that this is a cryptocurrency channel, but I really hope as I've done these videos and as you've watched these videos, if you've been watching the channel a while, I hope that it's really become apparent that you can trade anything with technical analysis. And right now, it seems that Bitcoin has been heavily correlated with the stock market. So I think it makes a lot of sense to take a look at these stocks and to say, you know, are stocks looking healthy on the macro picture or are stocks looking bearish? And you guys know I've been pretty bearish on the stock market as well as Bitcoin for a while now. And, you know, I don't read a whole lot of analyst opinions on stuff because I think it clouds your judgment. But once in a while, I'll see an article and I'll go check it out. And so I've seen a couple of them recently. And, you know, there's just the one that I have read that I wanted to point out was this article here. This is actually an article over on yahoo.com. And what they were basically saying, I loved this analogy. There was some, you know, investors, you know, respected investors, whatever. Respected investor Jeffrey Gumlunk, I don't know how to say that. One of the most influential bond managers warned this week that markets will soon head south fast and that people should be more wary of the, what is that, panacea? Panaceas? I don't know. I'm going to have to look up how to say that after this video. Basically, though, what it comes down to is this. He believes this is a dead cat bounce, like what happened in 2008 before a more intense crash. And what I really liked about this article, other than the fact that it agreed with me, which is always nice, to see, you know, somebody with, you know, that level of experience agreeing with, you know, me after doing this for only a few years. But what I really loved about this article was this analogy they made, right? Right down here. Others believe that all the liquidity in the world cannot compensate for the collapse of real-world economic activity, and these moves by the Fed and governments are the equivalent of flooding a drought-stricken area of water for a few days. It feels like relief, but if there's no rain in the months after, it does little good. That's really, I mean, that's a perfect analogy because, yes, the Fed is printing money like it's going out of style. Yes, the Fed is trying to pump this market, but they can't do that forever, right? The reality is it's going to happen one way or another. Eventually, you know, the other shoe is going to drop. And we just had unemployment hit over 30 million claims. I think it was the last 6 or 7 weeks. We've got these unemployment claims, you know, absolutely skyrocketing. We have all these other things that's, you know, kind of starting to snowball. If we take a look at, I just happen to be on Yahoo. I'm old school. I've got an email from way, way back in the day. That's a Yahoo email address. And so I often log in and check my email and I see this, right? I don't know who this person is. I have no idea who that person is. But basically I just see this headline. Worst recession since the Great Depression ahead. 2009 will look like a flesh wound. Yeah, that's exactly what I'm afraid of, right? This person's apparently some kind of chief economic advisor. I'm not going to click on it. I don't care that much. But that's exactly what I'm afraid of. I'm afraid that we are going into a depression, not just a recession. A recession is like a 50% pullback. A depression is 80%. So right now I'm still, you know, holding out hope that, you know, we stop at some previous levels of support, like, you know, 15,000, I think it is on the SPX. Let's take a look. Yeah, I'm hoping that we stop around 1,500, not 15,000, sorry, 1,500 on the SPX, and I'm hoping that we get a similar drop at worst, you know, on the Dow. I'm not really wanting it to drop because it's just bad, right, all around. But if it drops, I'm hoping that that's as bad as it gets. I'm hoping it's not actually another depression. But if we look at this thing on a daily chart, it was in a rising wedge on both RSI and price. Okay, so it had this really nice rising wedge. And I say really nice, but it's a bearish pattern. It broke south of it and closed south of it yesterday on RSI, and it was still sitting within the tails, not the closes, but it was still sitting within the tails on price. But today you can see here that there's a little over an hour left in the trading day, and it looks, like it's going to close, obviously well outside of the wedge. What needs to happen, this could be a bear trap, okay? This could go back up, but what needs to happen is it needs to stay above this purple line. If it crosses through that purple line, it's going to be a lower low, and that's going to be a confirmed breakout of that rising wedge, which would be bad news. I am almost wondering if it ends up doing something like this. I'm not an Elliott wave trader, so keep that in mind, but this almost looks like a 1, 2, 3, followed by 1, 2, 3, 4, 5. And then, you would get like more downside, like a 1, 2, 3 downside. So, doesn't look good. And if we take this and we put this on a, slide the scale down here, if we draw a trend extension on this stock market, and again, I'm talking about stocks because they're correlated with crypto right now, or the other way around, right? Gives us a target down around 13.5 on the Dow, which would be a drop from the all-time high of about 54%, which again makes sense for a recession. Okay, so let's jump over to Bitcoin. What does that say for Bitcoin? Well, what it says for Bitcoin is I think that obviously this pump, I was never a believer in the pump to begin with. So I just think it's more evidence that Bitcoin is probably going to go back down. But let's talk about a chart. Let's talk about some different levels and things. So the first thing I want to talk about is some lines, some simple lines. Let's just look at some trend lines. So, you have people who are like, oh yeah, this is the new bull run and this and this and this. And it could certainly be, but you need to keep in mind that this red line right here, this is the high, this is basically your resistance when you draw this from the highest close in 2017, the close in 2019, and so on and so forth. And you can see that what we essentially did on this pump, this giant pump, was come up and test that line. The green line's even easier to see. That was the resistance from the June high to the February high, and then here we are just testing that. So again, those are places that big money is probably shorting, which is why you get the huge needle there or the huge wick. Okay, we have not broke out of the downtrend. This is absolutely a downtrend until it starts closing above that line and starts moving back up. It's a macro downtrend. So what does that mean? Right? What does it mean to be in a macro downtrend? Well, let me show you. Take all the lines off there so that's a real clean, simple to read chart, right? All right, so there's a super clean chart. Let's put it on a monthly so that's a little easier to see what's going on here. And if you have a downtrend, you can take a trend extension and you can draw it from the top to the bottom to the first pullback. As long as this pullback isn't more than 70%, it's going to be valid. And what does that do? We want to put it on a log chart because we're talking about a 2-year time frame. All right, I don't know what was wrong with my tool there, but I've got it fixed now. So essentially what that means is that gives us a target down around $2,181, okay? If we're looking at this on the larger trend. That's what it means. When we get there, it doesn't tell us. It doesn't tell us when, it just tells us a target. So that's kind of what I'm watching. And again, if you go back and look through my Twitter history, months ago I was talking about the possibility that this was actually the top here of a macro bubble, and that this over here was actually complacency, right? Meaning that we have a long way to drop, right? We're talking way down to a potential 3 digits. Do I think that's what's happening? It's hard to say. It really is hard to say. I think it's a bit far-fetched to try to make that type of prediction, but it is possible, right? It is possible. If we take this out, then what we're going to have is we're going to have a giant double top. So yeah, it's possible that this thing's going to go even lower than I think it is. But I'm keeping an eye on that, and the market, the stock market, if it becomes a Great Depression, yeah, I think this is probably going back down to triple digits, probably low triple digits, but only if the stock market gets battered like 80%. I think if the stock market pulls back 50%, I think Bitcoin's probably going to bottom out down between 2 and 3 grand, right? Maybe slide down to 1 grand, retest that 2013 high, but I don't think it's going to go back to triple digits unless the stock market completely falls apart. That's my opinion, right? So let's talk about, some charts, and let's talk about some, weekly charts and daily charts and things like that. First off, on the weekly chart, it's not closed, right? So we really need to wait for a close before we get too excited and start trading off of the weekly chart. But you can see that this RSI is just sitting right there at resistance, neither above it nor below it, just sitting right there at resistance. So if that closes in that general area, and today is Friday, which means the CME is going to be closing in a few hours and reopening Sunday, it's very likely, or potentially likely, that that is where this closes at in a couple days. That would be a bearish signal to me, and I would probably be looking to go short, okay, if I'm not short already by that point. On the chart itself, as far as the bullish side of things, we are above that 19-week moving average. So, of course, if we do start to move back down, I want to be watching that. I want to be paying attention. Is price going to get back down there? And if so, how does it act when it gets there? Okay. But other than that, I don't see this as being bullish. I see this as being yet another lower high in a downtrend, which, I would expect to be followed by a lower low. So that's what I'm seeing on the weekly. I want to wait for the close and see where the RSI is at. Okay. If we take a look at a daily chart that's properly mocked up, we have the 200-day moving average, which we are actually above. So again, just like the 19-week moving average, by the way, they're almost exact. They're very, very close, right? I want to see what happens if it gets back down to that level. I'm also watching intently because we have a liquidity gap, right? That formed when this giant candle was formed. So now we have a liquidity gap in between these two horizontal green lines down around $7,800. So I absolutely expect this to pull back down to that area at bare minimum. All right. We also have a liquidity gap way down here now, right there at $5,452. Right. We have the halving coming up. It's actually on May 12th, which is just 11 days away. Historically, Bitcoin pumps going into the halving and then dumps. Right. It's a buy the rumor, sell the news type of event. So that's exactly what I'm expecting to happen again. Also, I'm going to jump over to Twitter because I posted this earlier. So if you guys remember back in October, right, we had the huge pump. It was like a $3,000 or $4,000 pumped from around low 7,000s up to 10.5. A lot of people got very bullish. A lot of short, bears got stopped out, and people were talking about the bottom was in. The bottom was in. This was actually the golden pocket of the larger move. All these things. But what really happened was it dumped. The next day it pumped right up to the golden pocket, the 61.8 Fibonacci level, and then it dumped, right? And if you look at what happened this morning on Bitcoin, my Discord and I were watching this, intently. It went right up to the golden pocket, just like in October, and then it started to move down, okay? And it was no coincidence. It was no coincidence that it moved down. Look at this. Right? Came up for a bearish retest of its RSI trend line, came up, that purple line's the 61.8 Fibonacci level, it kissed it, and then boom, dumped, right? Which means that it's potentially going to play out like October. And if if it does play out like October, this is what we'll get. In fact, let me put it on a chart just so that it's a little bit easier to see, right? So if we go back to October and we put some ghost bars in this thing. So where's October? October's right here, right? Look, I wouldn't expect the fractal to play out like this whole area. I just want to be very clear about that. But if we do take that whole move, right, and we line this up with the top yesterday, it looks something like this, right? Again, I don't think this is going to play out. I don't think it's going to pump back up and do all this crazy stuff. But this is basically what it looks like. And if it dumps back down, this would dump it back down to around that $5,500 area, $5,400, $5,600 in that ballpark, which guess what? It's right down in the same ballpark as the 200-week moving average. So it's potentially, it could end up putting in like a double bottom, retest this trend line, and then move up off of it. For sure, that's potential, right? I don't think so. I think if it starts to dump and the stock market is doing bad, I think it'll just keep going down. But if the stock market doesn't do that, if the stock market, is holding up or doing well, and it does move down there, I absolutely think that it's, a potential long play. And again, we'd have to see what it looks like at that time and what the environment looks like. But I wouldn't rule out that this is the bottom back here if we get a move like this, right? Where it ends up being a big W. So that's, kind of what that fractal would look like. It's just one possibility. Remember, there's lots of possibilities. We don't know. It's just one thing to kind of keep one eye on, okay? But other than that, the daily RSI is overbought. Doesn't mean a lot. RSI can go a lot higher, right? You can see back here that if it wants to run, it's going to run, right? There are no daily divergences yet on regular divergences, but there is a tiny, tiny, tiny hidden bearish divergence. So back here, RSI was actually, these darn coughs. Back here, RSI was 74.33, right? Actually, sorry. The high right here at 10,483, RSI was 71. So you get a line right here. Over to here, it's putting in a higher high on RSI while putting in an obvious lower high on price. That's called hidden bearish divergence when you're in a downtrend, right? So there is hidden bearish divergence there on a daily chart. If we zoom in and look at, this 4-hour chart, again, this looks like this was a trend line moving up. It broke through it. It looks like a bearish retest, and then it broke down, right? So there was a trade there. There was a short trade on the close of this candle here. What that trade would look like if you got your 61.8 up here, it kissed it, plus the bearish retest. You could set a stop loss at the top of the wick and then set your profit target down at this old high right here, the close, which could potentially act as support, and you get something that looks like that, and you can see boom, right? So that that's like a 2.5% move, that trade. That's over with now though, right? Now I want more confirmation. I don't want to just get into a short position because of a trade that existed up here, right? I want to make sure that it's actually moving down, because if you are looking at this without any kind of bias, there's still the potential, right? If you draw this from this low back here to this high, this actually kissed the 38.2, which is often a continuation, right? It is often where you get the big move up, the pull back to the 38, and then another move up. Now, do I think that's happening? I don't, but it's possible it is, right? The reason I specifically don't think it's happening is because of what's happening right here. If this goes down and takes out this low, then what you have is, high, low, lower high, and lower low. And that would be a trend reversal on the 4-hour charts, right? Now, if it doesn't go back down, if it ends up doing this, where lower high, but ends up stopping here and going up and breaking this, well, then you've got a higher low and a higher high, and that's what would make me think is actually going to go higher, okay? So that is how that works. Really simple stuff. It's not complicated. The hardest part about it is just, keeping your emotions in check, right? It's really not complicated to get in and out on these movements. You can get in 1%, 2%, 3%, 4% on these types of volatile moves, and it's a gold mine, right? It really is. And then you don't have to worry about, oh my God, what's Bitcoin doing? What's Bitcoin doing, right? It's a much less stressful way to be, okay? But that's what I'm saying on the smaller time frame. That's what I'm saying on the daily chart. That's what I'm saying on the weekly chart, and that's what I'm seeing on the stock market, right? It definitely broke outside of that wedge, and now I'm just waiting for confirmation. I'm waiting for it to break and close below this pink line. Of course, I may be waiting a while because, again, today's Friday, so the market's going to be closed for a couple of days. So don't forget that Bitcoin specifically loves to chop. It loves to chop around on weekends while the CME is closed, okay? So that's important to remember because if you're trying to long or short on a Friday on a swing trade, you might have 2 days of sideways action before it makes up its mind which way it's going to go. Okay. Speaking of the CME, we can take a quick look at that real fast. So it's sitting at 88.35 right now, which means it is still above its 200-day moving average. And look at this. I mean, this is interesting. It did come down and test. It closed above it, came down and tested again, closed above it. So those could be considered bullish retests of the 200 moving average on the CME, right? And if you know anything about a bullish retest, what you normally get, if that is what that is, you normally get this, retest, moonshot, right? further upside. So I think it's definitely worth watching that. I don't think it's going to suddenly skyrocket today. I think when it opens Sunday evening, a couple days from now, I think we'll need to keep an eye on it and see whether or not it loses this level or whether or not it keeps it, right? Because when it keeps it, you normally get more upside, okay? You really do, which obviously for bears that would be bad, but for me, I don't care, right? I really don't care. If it goes up, I'll long it. If it goes down, then I'll short it, right? It's all the same to me, it really is. So anyway, with all that being said, I'm going to go ahead and wrap the video up there. Please remember that I am just some guy sitting in a spare bedroom, so nothing in the video is financial advice and nothing in the video is trade advice. You should always do your own due diligence and seek out professional financial advice from a professional financial advisor before making any type of investment in cryptocurrency or the stock market. All right, this is James with Crypto Common Sense reminding you to please, please, please trade safe.